I get a lot of questions about rates, merchant account rates, and specifically card present or swiped rates versus key entered rates, where you might be using an invoice or a hosted payment page or whatever. Card not present versus card present. So I'm going to go over that today, give you the rate ranges, the differences, and why there is a difference coming up. Interchange rates and all the different fee structures can get quite complex when it comes to merchant account pricing. I have other videos, of course, that dive into what interchange pricing is, what tier pricing is, flat rate programs. And if you've researched it at all, you know that Stripe and PayPal and aggregator payment companies have a fixed rate. And then a lot of merchant account companies charge membership programs or Interchange Plus, or some have bill back and all different types of rate programs. But one very common question is, what's the difference between a card swiped rate or a card present rate and a card not present rate, where it's either keyed into a credit card terminal, keyed into a computer, or a transaction that's done online on a payment page. The rates range from, on the low end, 80 basis points or 0.80%, up to about 1.65, 1.75, or 1.8 for card present rates. And then they'll go from about 2% up to just under 2% for card not present rates. And these are all your key entered rates. So there's quite a range, and it depends on, the type of card and the bank that issued it. So there's different variables that go into it. But essentially you have below 2 for card present, and you have 2 to 3%, or maybe a little bit over 3% for all of your card not present. And again, that's your invoicing scenarios and your payment pages and all of your online transactions. So when your business is processing and you're out there, you have, let's say you're a home services company and you have techs in the field or salespeople in the field that are out there in front of the customer, and maybe they sign a contract or an agreement, and they have the ability to take a phone or a mobile device like a Clover Flex or something like that will allow payments on the go. It's always better to exercise that option to get a physical card reading, either by NFC, EMV, which is the chip, or a card swipe, versus letting the contract go back to the office and sending out an invoice and letting the customer type in their card information, because you get that card present rate. So it could be as much as a full percentage point different when you're swiping a card or taking a card present transaction versus the card not present or key entered transaction. So if I'm talking to somebody who wants to know the difference between a card present and key entered rate, generally it's about 50 basis points different, up to about 75. And again, that's 0.75%. So card present rates, 1.75, card not present rates, 2.25 to 2.5 as a general benchmark. Okay. Now, if you're in a card present environment, retail or out in the field, that really doesn't matter. But if you have a card present rate, there is a downgrade fee if you have an Interchange Plus or a tier-based program. And even with Stripe and Square and even PayPal, they have these downgrade fees that you can pay. And a downgrade, it's an interchange downgrade that happens when a transaction doesn't meet minimum requirements for a specific interchange category, and therefore it gets recategorized to a higher rate category or tier, which is more expensive rate cost for you, the business owner. Okay, so that pulls into play the interchange classifications and how they're charged to you. So for example, a retail credit card, a standard consumer credit card might be a card present rate of 1.65%, but let's say the billing zip code and some other address verification information was not entered at the time the sale took place. It wasn't entered into the credit card terminal or the point of sale system. That could cause a downgrade that would cause the 1.65 to downgrade to a higher rate that's sometimes above 2%. And that obviously hurts you, the business owner, in terms of the cost that you pay to accept that transaction. So when possible, always enter as much information as you can, as your cardholder or your customer rather will give you, the cardholder that is, and enter it into the credit card terminal or machine so that you can make sure you're getting the lowest possible classification for that card type. So one final note about downgrades, there's a couple things that are major causes for downgrading. One of them is address verification, as I just mentioned. The other one is not settling out your transactions to be collected on a daily basis. So most equipment will automatically do this, and you should have them set to auto batch or auto settle on a daily basis. That way you collect your money quicker and you avoid downgrades. And the third reason is point of sale systems not being coded correctly with the proper SIC code and the other business classifications. So you have to make sure, if you're using a gateway or one of the integration methods that payment processors have, you have to have everything coded correctly. Because if you're a restaurant and you're classified as a jewelry store, it's not going to be sending the proper information over to the cardholder's bank, and things can get messed up in the middle. I've seen that happen before, where card present transactions were all downgrading, and a restaurant that should have been paying high 1%, as we've discussed in this video, was actually paying a lot of like 2.5% rates and even higher than that, because every transaction was downgrading because of the point of sale system being miscategorized. So make sure all those things are in order when you're setting up your point of sale system. So there you have it. That's card present versus card not present, and the rates that go along with each of those. If you're looking at merchant account rate programs and so forth, there's other videos linked in the description where I dive into interchange and all the costs for merchant accounts, including equipment and terminals. So if you're doing more research, scroll down. I'll have them linked on the screen here as well, but go ahead and check those other videos out. And thank you for watching. Give me a thumbs up if you enjoyed this content. If you want more videos just like this one, subscribe. And down in the description of this video, there is a way to get in touch with myself and my team if you have questions that you'd rather just talk through with us. We do consultations on an as-needed basis as time will allow. So check the links as usual. Thank you for watching. I'll see you on the next one. I'm Brian. Have a good one.